Hello and welcome to another episode of Casual Friday. I'm here with the Duck. The price is no longer 29,000 BTC. I'm sure we'll talk about that. Before that though, the show is brought to you by Woo. As always, links available in the description below. Please read our long form article, and as always, do not keep any more funds with an exchange than you need for trading. As always, thank you for the support on the show. We appreciate all your likes, comments, subscriptions. Thank you for sticking by the less volatile period, and we have a lot to discuss today, Don. So where do you want to start? I think in terms of just magnitude, to set the scene, we had more liquidations yesterday or on this move than we did during the FTX implosion. So we, depending on where you get your data, CoinLies is showing 800 million in long licks and about 200 in short licks on that day, and roughly about a billion put together, depending on how you count and where. And that's more than the FTX implosion, which marked the bottom, and obviously all sorts of shenanigans followed. So pretty big move.
Holy shit, I didn't know.
Yeah, it's quite shocking, isn't it, if you think about it that way? So that certainly sets the scene. I don't know where you want to start. I mean, we could sort of do the high time frame stuff first, but do you have any comments about magnitude first? Because I guess if I had to present one argument, so you had a tweet where you essentially said, updating one of your Bitcoin threads that you weren't planning on buying the 27 whatever support, which turned out to be a good decision. So at this point, the only things that could get you on board would be a proper like wipeout / nuke or above 30k. And the question is, if we're dealing with liquidations of this magnitude, does that not count as a wipeout event?
I mean, it does, but I think it could get much worse, right?
Right.
Like, I think in general, depending on how the ETF decisions go, if they're negative, I think we're just gonna like disappear. Basically, the entire market's gonna disappear. Right. And if they're positive, I think it's just gonna go up. So, given we had this drop before anything comes out, I just think there's the possibility for more. Obviously, also the possibility to just full engulf this thing and send it if we get positive news. But yeah, that's basically why. I don't really see a point in positioning myself before the news hit, because I don't have much edge in anticipating whether we're actually going to get an ETF or not. My base case is still everything is going to get delayed. And that would be terrible, especially right now, given how the market looks, right? So I think it's still time to chill. But I would agree with you, and I do agree with you that this is a wipeout event, and people obviously got liquidated, and not only people, it seems like bigger players too. But it's not enough for me yet.
It's getting there, presumably.
Yeah, it's getting there. If I was awake during like the steepest part of the drop, I might have like played with it, because whenever you have these massive liquidations, there's money to be made. I mean, on BitMEX, for example, not a place that I trade anymore, but on BitMEX, it went below the BlackRock ETF announcement. It went all the way down to 24K.
Wow.
And there's a trade to be made there, but in general, to me, the trend's down now, and I have to pick my battles wisely. And I don't like, just from price, I don't see anything. If anything, I would have to speculate on the ETF for any kind of buying for me to happen. Like if I'm very, very positive that the ETF is going to happen, then maybe I could see myself buying, but I'm not. So I just don't see it.
Yeah, on that front, we might be getting news today, I think, potentially, as far as the Grayscale case is concerned. So as we discussed last week, there could be a sort of ripple effect, no pun intended, that if Grayscale is successful in their case against the SEC, then that'll have, that'll essentially have positive implications for the other ETF applications, and it essentially kind of becomes an all-in-one. I think the two deadlines for that, tentative ones, given, the legal process isn't super clear in that regard. It would have been either on Monday or something of that nature, or likely today. I mean, this isn't a definitive thing, but just probabilistically in terms of when these cases typically get resolved. Some of the analysis I've seen were pointing towards today or kind of early next week, and even those are relatively late timing-wise. So we'll see. I generally agree with you that, especially after a wipeout move like this, books are still thin, generally speaking, and the market always sort of churns and digests after these types of events, and there are just fewer participants in the books, and the ones that are quoting are being more conservative. So if we get some good positive resolution as far as the Grayscale SEC case, it'll be pretty easy to retrace decent chunks of this to the upside. But obviously the opposite of that is true as well, right? That if we get bad news and no friends to be found in the Grayscale SEC news, or even if we just don't get any news, the market stays where it is, that's not a particularly good outcome. But yeah, purely in terms of magnitude, we are reaching sort of wipeout-ish levels, but it's not uncommon for the market. I mean, phrase it this way, V reversal is one of the least frequent resolutions to this type of thing, right? So if your reasoning is big wick, therefore bottom, therefore it's just going to immediately engulf the whole thing to the upside, that tends to not be how it goes. If anything, it tends to either revisit and sort of backfill some of the wick before going up, or it just chops and then decides on direction later. In the same vein, I think if you're waiting for a V reversal for higher, and I don't think that's the best idea. I also think if you're looking for bearish continuation, you actually don't want to see any retests of broken levels and so on and so forth. That might make sense from like a TA 101 point of view, where you had the range, it broke down, it comes back and retests it and finds resistance. But that's not really how these crypto trend forming breaks work, right? Especially to the downside. I don't know if you agree with this. More often than not, you'll have like the big breakdown event and then a very shallow pullback higher, that is, very small retrace to whatever the next local level is. And if the market's weak enough, that's usually it. It's not a sort of textbook breakdown all the way retest and all the way back down. It ends up being in this weird position where if you're bearish, you want to see weak retraces only. And if it starts to retrace significantly towards what in pure TA terms would be resistance, it actually starts looking quite bullish. I don't know if that makes any sense. That's how my brain processes these things.
No, 100% agree. The thing is, when you get massive moves, retests just don't happen. If you get small moves, they do happen, right? So if you look back, for example, towards like 30K, we got 2 retests there. It was quite like a nice area to do business in if you wanted to. And it was quite clean. And the reason for that is basically because we didn't really have a move before. It was just like walking down, and then if it walks down and then bounces into resistance, that's the bearish retest that you get. If you get a full blown breakdown and then you get a bearish retest, it's more likely than not just not a bearish retest. It's not gonna hit those levels again. Like I think in general, like if we go back to 29K and you'd expect a bearish retest there, I think you're just going to be wrong. It's not going to happen. Like if anything, you're going to get a bearish retest at 27, and I'm talking about BitMEX prices. I know that Binance is quite a bit away from those. So there's a little bit of a difference there. But like if you go towards 27.3-ish,
is it like that old daily cluster going back to like March almost? That seems to overlap quite a bit with the level you're discussing.
Yeah, exactly. It's the 18th of March, that kind of candle close. Used to be good support, turned good resistance into kind of like a breakout level. People tend to overlook these because they're like, oh, it didn't work on that breakout, but it did work, right? That's where the big move comes from, right? So basically a bunch of people positioned themselves at the level because the level was significant and they got run over. So a strong reaction after a level is hit is also a reaction to the level, even though like it might have not gone the way you wanted it to. It's still significant, and we broke that to the downside. And I think if you're a bear and you're looking for more downside, that's kind of the level that you would be looking at. But I think in general right now, the TA beyond just trend isn't really going to help you much because it's all news focused. And there's just too big of a thing to happen. The ETF, like everyone's been waiting for this for basically 10 years now. If it gets approved, your resistances are going to do nothing. If it gets denied, your supports are going to do nothing. So you can trade until any of those happen. But the moment you get news, actual news, all of it is going to go out the window, in my opinion. So don't quote me on, oh, yeah, if you're bearish, it's going to retest 27.3 and then nuke, and then we get a bullish outcome to the ETF saga, and then you're like, oh, but Don told me to short. That's not how it works. Like
so ETF specific news is kind of overriding news in this context relative to TA,
yes.
and absent that, you can still pump the levels, but just be
Yes.
aware that there are stronger forces looming.
Exactly. I mean, if you're stuck in a trade and you're not looking at it, and this is why, like, I hate these kind of environments if I don't have like a big edge in news wise, right? Because if you trade something and you're not in front of your computer for a second and the news come out, like you have like a minute at most, I think. Maybe like 5 for the bigger move, but if you're already in a position, right, it's gonna, like, a minute is gonna be enough to completely fuck you over, and then you're gonna slip a shitload both ways, depending on how it goes. So you can trade, but you have to be there the entire time, and I hate those kind of circumstances. I'd rather just not, because I don't want to be stuck in front of the computer, slaving away, hoping, like, when I go to the toilet, hoping that that there's not gonna be the news, right? Like that's terrible. And that's why, like, trading right now kind of sucks, I think, because yeah, you can take advantage of the post breakdown kind of volatility, because there's always something to be done, right? A bunch of people got liquidated, the market is inefficient. You can take advantage of that, but you have to be in front of the computer at all times, given that, like you said, the ETF news are supposed to come out today or relatively soon anyway. Like, so.
And even those immediate sort of dislocation trades, those get arbed pretty quickly. Like, you're not getting them right now, for example, not the big ones, right?
No.
Like when altcoins completely break, a lot of quarterly futures went deep into backwardation, like that type of mechanical snapback stuff from empty order books and futures structure breaking. Those tend to be short-lived because they are so profitable. And arbing, like altcoin spreads, that kind of stuff, that tends to get pushed back in line relatively quickly. Like, it looks more reasonable than not, certainly now at this stage. So that class of money on the floor is gone if you weren't at your desk for those trades. So now you're essentially stuck in sort of less liquid, still some rotations, but the sort of brainless easy money is done, because we've probably seen peak volatility on that move. And now it's sort of hoping that the technical trades work out, plus basically catalyst waiting. Do you think that's fair?
Yeah, it is.
Okay. So yeah, that's fun. I don't know what other timeframes are explicitly relevant at the moment. I mean, the monthly's got 2 weeks left. I think if it closes below the close of the last, of the red month we had in May, that would look quite bad. Because, even if you were back and forth on whether that's a valid cluster or not, if it closes below it, then it doesn't matter if it was a valid cluster or not, right? Because that's a breakdown. So that would look crap. And then your next friend on the monthly comes in at like 23K-ish at the earliest, if not lower down. So, even for a moderate bullish argument, you want to see a close on the monthly above 27.2, which is quite helpful because it also overlaps with the daily, right? So you could get a bit of a cascading higher time frame effect if, we get good news or the market just doesn't dump and the daily reclaims that resistance, and that sort of pushes the monthly into a slightly more reasonable area. It's not as good as a 30K reclaim, but at least it's a starting point, right? But absent that, you're looking at, if you care about monthly levels, and we've been, we care about monthly levels, so they don't have to add any more weight to that. I think they've been quite good on average if you've been patient enough for them. You're left with 23 and then 20 on the monthly. So that's what makes sense there. The weekly, your single green candle box is just really fucking good. I don't really know whether that requires any additional context. You spoke about it on Weekly Open, on Technical Roundup, whatever. If you ignored all news and volatility, meme commentary, whatever, and just viewed this level, which you've had on for months, it feels like, from a technical point of view, it's rather straightforward. I would say with the benefit of hindsight, but not really, because, there are Twitter threads and we've spoken about it, and, it's fairly well documented that this was resistance. Obviously, that makes it hard to anticipate when the reaction is going to happen, the magnitude of the reaction, positioning for it, all that type of stuff. But from a purely TA-based point of view on the weekly time frame, there's been nothing particularly optimistic for the last 2-3 weeks. Certainly not since the 24th of July weekly candle closed below it, right? If you view it anatomically, we closed below, had 2 weeks of retest, and then this is the continuation candle. I was going to ask, though, on the weekly time frame, we've technically reached some form of range low, right? So if you take the lowest weekly close before the ETF bottom, That comes out at 25.9, 26K or thereabouts. So at least it's a local extreme of some sort. Now, obviously, it's not monthly support, nor is it the sort of deeper weekly supports at 24, 22, the ones that start to converge with the monthlies. But it is something rather than nothing, right? We essentially had a mega OI wipeout blowout event into an area that can be reasonably defined as a range extremity. That's not the worst thing in the world contextually. I agree that news is overriding, but for example, if someone just wants to have spot exposure before 2024, let's say that's their mandate for whatever reason, right? And they're less sort of price, they're more price agnostic, less price sensitive than we are from a trading point of view. And if they came to you and said, look, I didn't want to buy 30K because it just didn't make any sense. But now the market's had this mega washout event. It's not at 20K, but I feel pretty comfortable throwing a chunk of that spot allocation I wanted, be it 15, 20, 35% of it on this type of day. Would you shout at them, or do you think that's not the worst argument compared to alternatives at least?
Yeah, I mean, it's not the worst argument. No, I generally don't trade like that.
Sure.
But that's because I'm a trader, not necessarily an investor, right? Like if you're an investor, you can buy on these days all the time, and more often than not, you're gonna be thankful for it like years later. From a trading perspective, right? When I look at this weekly candle, I'm just like, we retraced the entirety of the ETF BlackRock, like the BlackRock ETF narrative. There's a reason why I was bullish at 16K, right? And the reason is we got FTX blew up and price just stopped, like it nuked, and then we got more and more bad news and nothing happened, right? Like price just slowly walked up. Now what we have is we got stupidly good news, right, over the last few weeks to months, and price went up and fully retraced that. And that's a sign of weakness to me from a trading perspective. It doesn't really make much sense to position myself bullishly given where we're trading right now. We're trading all the way back at the levels that we, in my opinion, shouldn't have touched again, right? And so that kind of makes the whole, oh yeah, I can buy like a washout like this. The whole argument makes it weaker to me, that argument, from a trading perspective. Now, like I said, investing is a little bit different. But yeah, it makes me uneasy, basically. I think we should have held higher if this was bullish, and the fact that we didn't held is just bearish. And this is technically an impulse after a couple of months of consolidation, right?
Yes.
And you don't want to necessarily fade the first impulse, I think. Like we had long consolidation, zero vol, and now we've finally picked the side, and then fading that immediately the day after seems early, right? Even if you're right, and this is the bottom. If you look how 16K traded, that was, you had 8 weeks of sideways before it started expanding upwards. So from a price perspective, you could expect something similar if this is bullish. The only problem with that is, and this is something that I'm kind of like going back and forth on, is that we are in the flurry of the ETF stuff. So like we're in the midst of it and probably don't have 8 weeks until that comes out.
Yes.
So I don't know how this is going to play out. My gut feeling is it's just going to go sideways from here. But when I think about the news that are going to hit, I don't think that's going to happen. I think we're either going to get expansion to the up or downside. So yeah, I think you literally just make your whole trading strategy based on DTFing and go with that. I think makes more sense than any levels. Like I said, like 24, 25K. It's completely meaningless in the face of that.
It's quite fitting that we have zero vol and then we get all the vol at once, both price-wise and catalyst-wise. I mean, that's very crypto.
Yes.
But I think it's a good framework, especially if, and leave us a comment if this show has been helpful or was helpful around 30K. Because if so, well, first of all, we'd like to hear from you. But second of all, you're probably in a better position than most market participants, judging by liquidations and open interest, to take advantage of whatever comes next. And you're trading voluntarily as opposed to involuntarily, which makes quite a big difference.
if you think about it, right, like we've been talking about selling 30K ever since it hit 30K, basically 30.5, whatever. And now you have the chance, basically, like if the ETF gets approved, you're going to get a big candle to the upside, but that candle has to be quite big for you to miss it, right? As in, like you sold 30K, you can just rebuy 30K or into that news candle and you're pretty well positioned. Or if the ETF gets denied or delayed, you have the possibility to just buy much lower. So it's a really good position to be in. If I think about like just buying here, you put yourself in a little bit of a difficult spot because then you have to kind of watch the market and be very very focused on whether you get a delay or denial or not. You have one decision that would be a good one, and two that would probably nuke your position. So it's a little bit of a tough one.
It's going to come out as soon as we release this episode, isn't it?
Oh yeah, it's gonna come out while this is like this is uploading.
Can you keep an eye on Twitter? I'm on one monitor and I'm using my phone as a mic stand, so you get to be our resident breaking news journalist for this one, Don. Yeah, I think that makes sense. So sort of contextually, getting 30K was the important part. As far as the mid-20s, all that type of stuff goes, sort of neutral, and there's going to be more news dependent, at least in the next week or so. I think that's...
I wouldn't even say I'm neutral. I'm still bearish, honestly. Just looking at price.
Yeah, sorry, I meant neutral as far as like how important are these levels? Like, well, it doesn't matter.
Yes.
Yeah.
Because technically, in my eyes, if you look at it just from a price perspective, ignore all the news, all that kind of stuff. We just broke down, and we are back at range low, but also this was a long consolidation at range high. You'd expect a little bit of expansion from that.
Yeah.
So.
I think the daily time frame is probably the clearest way to show that. We had basically one trading range between 30 and 32, and we went sideways there and then broke down and formed a new one between like 29 and 30, and then broke down from that very impulsively now as well. So I think the daily time frame gives you your ammo there. On Monday markets, one of the arguments, I was like, well, look, the volatility is crap, the market's crap, but one thing I don't want to be doing is stepping in front of this thing too early. And the argument I made was with reference to 6K, where I'm sure you'll recall that one of the prevailing narratives was basically buy the breakdown because it's cheap. And another way in which the prevailing sentiment sort of came about was, oh, well, we're not going to like spend a lot of time below 6K. Maybe we spike to 5.4 or God forbid 5.2, and then we'll get back up. And of course, the market didn't do that. And the argument made at the time, the argument I was making at the time was, well, if 6K is such an important inflection point, and you think all this good stuff's going to happen back above 6K, why don't you just buy back above 6K, as opposed to having 6K as this really important anchor for your bullish ideas, and then trying to time the market when it's below 6K. It just didn't seem terribly intuitive. And I think you can apply a similar framework in this case. That like high time frame breakdowns after volatility constriction can be kind of scary in Bitcoin. So you need to be careful. And if you buy it too early, you get carried out, even if ultimately you end up being right over X period of time. So instead, you can just either wait for like proper high time frame discounts after giving the range time to expand, as you mentioned, if you think there's going to be continuation, or if you have the luxury of not being stuck in positions or having to manage stuff, just wait for one of those range reclaims. I mean, yeah, you'll miss the initial impulse or whatever it is, but it doesn't really matter because you probably get a better trade and a better invalidation from that type of reclaim setup than dicking around in the middle, That's what makes sense to me, at least. And yeah, on the daily time frame, we spoke about it. It sort of shows all those range breakdowns. And ETF news aside, if we take a purely technical perspective, the short-term pivot is that daily cluster around 27K, I think. I think that's going to be useful. If anything, if you want like a trading range for the time being, I don't know if you agree with this or not, I would have that 27K-ish cluster as resistance, and then sort of the bottom maybe quarter of the wick as a short-term support. Because in the past, the market can, of course, spike it, and it has done so in the past with big liquidation type of days. But it's also not uncommon just to see the market push towards the wick and form some sort of dodgy low time frame, higher low wick refill type of strategy if you're really short-term trading. So if you're looking at stuff today, I think that makes sense. Sort of the daily cluster above you and more or less the wick below you if you're looking for short-term anchors. Do you think that's somewhat reasonable?
Yeah, I think it's fair. Like support... at like 25.
Yeah.
Resistance at like 27.
Sure.
Like high 25. Depending, it's annoying that prices are so different now.
Yeah, even between like Binance and Bybit, there's like a $350 difference on BTC or something.
Yep.
I mean, someone got carried out on this.
Yeah, and it's going to take a while to get back in whack. I mean, the difference between Binance and BitMEX is $700 right
Yeah,
now.
it's shocking. Yeah.
And then, like, if I say like a price level, like if I say 25, it's 25.7 on Binance and it's 25 on BitMEX. It's annoying as fuck.
Yeah, BitMEX really broke on that one.
Oh yeah. I mean, it wicked like completely.
Deribit got nuked as well.
Oh, Deribit got completely. Deribit, there was like a bigger entity that got completely carried out, and they had to like, try to put out the fire basically. From what I heard.
Which makes sense, right? Because that's where people trade vol, and if you're on the wrong side of that and you get pummeled by the delta, then I mean, good night, basically.
Dude, imagine being a vol trader and actually losing in this environment. I don't understand how you can like fuck it up that badly. Like legit.
Like you're supposed to be the smart ones.
Yeah, not only that, but we had no vol for the longest time, right? We made new all-time lows, if I remember correctly.
Yes, correct.
So you're kind of like at some point you have to reduce your positions, no? Like you have to be like it's just like it's gonna go sideways forever, especially given we knew that the ETF decision is around the corner, right? So like they should have even seen something coming in the next few days. Like the fact that you're not moving out of the way at least a little bit is staggering to me.
I feel like that's how a lot of vol strategies go. It's like sell vol print, sell vol print, sell vol print, blow up, pack up your desk, move to the vol shop next door and run the same strategy ad infinitum. That really seems like the life cycle of a vol trader, especially in crypto, but it's quite popular in legacy as well. I think it's a pretty good job of BTC. And, you mentioned when we were speaking that you're down for a self-congratulating type of episode. But you, of course, know that we're terrible at doing that. And it always feels cringe. And all of Twitter is self-congratulating on days like these. Even though if you look at the open interest, you can just tell that there aren't as many winners as social media will make you believe there are. But at the very least, if some of our commentary at 30K was helpful, let us know. And I'm glad, I wasn't long or anything of that nature. I'm not super interested in like swing shorting crypto nowadays. Similar boat to you. I think that could just be your negative influence. Because I don't have like personal overriding reasons as to why that would make sense, but it just kind of feels right. Maybe it's just boomerism and age showing as well, and I'm kind of focusing on some other stuff. But yeah, I'd rather just buy mostly spot stuff at opportune times and leave the shorting to the other market participants. So we'll see how that goes. I think that's about all we can say for BTC. Got the hard part right, You didn't buy the top, so you can operate freely from then onwards. ETH. So ETH BTC has an interesting candle. Don't know if you looked at that on the daily. That was something. But as far as sorry, go on.
Makes me bearish.
Makes you bearish. Okay, so as far as ETH itself goes, I don't know how much higher time frame stuff makes sense here, given we don't like this chart. I'm not going to cope with the monthly support. It has been more. It's been sort of viable, but more of a reaction-based level than something useful for like swing positioning or whatever else. Like for example, if you bought the monthly retest in June, that did fuck all for you. Like it's one of those that looks nice on a chart, but if you actually tried to plan some trades from it, you'd realize that it's not particularly useful. And then on the weekly time frame, hey, the good news is, Don, we at least moved away from 1935.
That was such a good level in hindsight now. Like we fucking hated on it because it just like we hit it and then nothing happened over and over and over again. But that was such a good level. Like if you shorted 1935.
Yeah, and then went into a coma.
Yes, because I mean, if you shorted it, you would have 100% closed it eventually.
Yes.
But like that's a sick level. Played out basically as well as it could have, even with the stop loss above the high, which we talked about.
Yes.
Like the fake breakout, like that's the stop entry 1935, 1940, whatever.
Sure.
Beautiful, but we don't short, and it fucking drove us nuts. So I'm glad to see that we're gone now.
Yeah. That level is not to be seen for decades, right, Don? In terms of where we've ended up, so this is one of the levels that was sort of on our radar, I think, from a newsletter, technical roundup point of view. Also, for those who have, were waiting for the newsletter, we've just simply skipped it over the last couple of weeks because we essentially made our bearish arguments and then there was nothing to do. So there's going to be one next week for sure, trletter.com if you want to sign up and read it. But essentially, we don't want to waste your time if we have nothing new to say. There's only so many ways we can rephrase the same argument and the market not moving, and pumping that out arbitrarily didn't really appeal to us. So
yeah,
I hope that's understandable.
You can talk about different stuff when you're actually talking, right? And then it's like at least there's entertainment value, even if there's no actual value.
Yes.
But if you write it out, it comes across as very odd if you just repackage whatever you've said. Right. So yeah.
There's only so many times I can come up with synonyms and whatever else for stuff we've written. So that's right. In terms of where ETH has ended up, it's an interesting spot, right? So similar to BTC, it's reached one of those sort of weekly extremities. If you take the close of the 13th of February weekly candle, that sort of pre-breakout high, that's more or less where it is. You could also sort of delineate it by using that deep swing low from June. We sort of spike there and are trading around that similar price. You also land there if you take a shallow range from 1.9K to 1.4K, and then you get a midpoint of sort of 1.6, 1.7. So it's some structure rather than no structure, I think.
Yes.
It's not the best, like it's not your 1400 preferred level, and it's not trading at the range extremity. If anything, by most measures, this is the range midpoint. But it's something rather than nothing, and that's fine. Do you have any sort of diverging views on ETH compared to what the argument you made for BTC? They're like, look, we're at some sort of level, but the efficacy of that level will primarily be determined, or almost entirely be determined, by ETF-related news. So we're somewhere weekly-ish that matters contextually TA-wise, but TA itself contextually matters less because we've got catalysts hanging over our heads. And it's the same on the daily, right? Sort of traded into 1600. There's a cluster there. There's a swing low there. All of those, and the mid-range more broadly. So is there anything different for ETH? You did mention the ETH-BTC made you bearish. Does that play into your analysis?
Yeah, I mean, when I look at ETH USD weekly, right, that just immediately reminds me of Bitcoin USD daily, before it, like when it did the high and then just broke down.
Right.
As in like when Bitcoin was trading at 30.7-ish, that level where you had a false breakout, all that kind of stuff.
Yeah.
And then you hugged the support level, right, for ages. And that's kind of when I look at ETH BTC on the weekly, we're hugging that same support level for ages. And
so ETH USD on the weekly or ETH BTC on the weekly?
No, ETH USD on the weekly. Okay. We're hugging like 1700 ish. We've done that for quite a while, right? We tested it before. We rallied to 2.1K. We tested it again before, like in June, and then now we're back there again. And it's a little bit of a thing where I just don't like when you test support that often. That said, it's a little bit of an odd one because I said the same thing at resistance. I was like, this is most definitely like something that you don't want to long, but this resistance has been tested a million times. I don't feel comfortable shorting. And then it nuked. And now it's the same, really like the same story where I'm not comfortable buying this at this kind of level. Just because it's tested it so many times. So we'll see. Maybe it'll play out the same way, which is in an eternal range between 1600 and 1900.
No, we're not allowed to go back to 1935. I'm just not mentally ready for that.
No. But yeah, I think in general, the ETF thing, like you said, that's the main driver. Okay. Just looking at the TA, yeah, I don't like the support. I like it lower down, and significantly so. I think ETH is one of the ones, the same as Bitcoin. Like I'm willing to buy like at 1K. That's quite a bit below where we are right now. Or I'm willing to buy it into strength. I don't really see a good reason to do anything before either of those hit. And the reason why I said ETH BTC makes me bearish is like it's not necessarily ETH BTC, it's the reaction of all the altcoins.
Right.
And it's basically people are immediately rushing back into altcoins after something like this, which, I mean, it's an impulse after a long sideways period, people should be depressed and people shouldn't be looking for more
People
risk.
should be depressed, quote CryptoDonAlt
No,
2023.
but like after like something like this, right? People should be terrified of buying crypto, and they should be terrified of walking, like basically going out of the like going further out on the risk curve, but they're not. And they were willing to buy ETH basically in the last few hours. After the breakdown, they're willing to buy a bunch of other altcoins. Now, most altcoins are lower than where they were, even on the Bitcoin relative pairs before the breakdown. But I'd rather have like see a little bit of panic in the market. All I've seen is basically a bunch of people getting liquidated on, to be fair, like not the biggest move, right? It is quite a significant move, but the weekly candle is right now basically down like 10%. We've seen much worse. Yeah, it just has me a little bit worried that people are very willing to jump right back into the altcoins, jump right back into everything, while the market is kind of garbage, right? Because there's a reason why volumes were so dead before, and there's really not that much retail interest in the altcoins, and seeing like a bunch of people jump into the altcoins again just has me worried. It's not necessarily something that's impacting my trading decision too much, but yeah, I don't like it.
Do you think
Feels like
there's a valid counter argument in positing that the green in altcoins is not sort of risk off fresh participation, let's buy the dip on alts, but rather a mechanical snapback based on the market sort of coming into order after empty order books got pummeled with liquidations? So the moves are just sort of micro-structural and mean reverting more so than reflective of risk appetite?
I would agree to that if these altcoins were not trading above the highs of yesterday, on the Bitcoin pairs, right? Like you have a
Right.
bunch of altcoins that are actually trading above where they were, like above where they were relative to Bitcoin yesterday, as in before the nuke happened.
Okay.
And that has me like, I'm like, okay, there is money inflow. There's a bunch of people trying to take advantage of like cheaper altcoin prices, rather than. And I do agree, like this happens all the time where you have a massive nuke and then you get a candle that goes like 10% up. Like you get a 40% candle down and you get a candle that goes 10-20% up, and people are like, oh shit, like this is a buyback, the epic buyback, whatever. But at the end of the day, it's literally just an empty book, and one guy just market smashes into an empty book, slips like 10% by himself, and that's
Yeah.
that. I wouldn't necessarily call this that. But we'll see. Like I said, it doesn't have a big impact. It just makes me a little bit
Sure.
worried. This is one of the things that I watch to kind of make me even more defensive than I already am. Which, I mean, I don't think I can be much more defensive anyway. Like having no position, not even like stable coins in the market right now, because I don't want to have any risk. Don't think I can get more defensive, but still, like
Just
it
give me
has
all
me.
your money. That'll be pretty defensive.
Oh, that'd be too aggressive.
Source, trust me, bro. No,
Trust
I
me.
think that's reasonable. I think if we zoom out and sort of collate those views, the argument is essentially that from a TA point of view, the bearish argument is enforced that we consolidated for 1 to 2 months. Vol was dead. That vol has seemingly resolved. It's resolved to the downside, and so choosing to buy the first impulse on that resolution could be too early. And then on the micro level, most of the TA sort of makes sense in terms of, there are tradable levels near to where we are, mostly defined by the wick that we set and the overhead daily resistance nearest the price. However, it's likely that if the ETF news comes in, any short-term trading decisions based on those structures will be overridden by the resolution of the news. Is that fair?
Yep.
Okay.
And also, like the news are gonna be mostly Bitcoin centric, right? So if you expect a massive positive impact, you would expect it to be mainly in Bitcoin, at least at the start. So this whole like altcoin risk taking is just odd to me. Like I think that's just basically a bunch of people being greedy, rather than like sophisticated actors doing
Sophisticated actors,
things.
yeah. Yeah. Some good drama on Twitter about that recently.
Yep.
Let's touch on some altcoins and then also the S&P, because I think all of this stuff is relevant. The Litecoin halving still hasn't kicked in. I'm not entirely sure what's going on.
It has.
Go
Measure
on.
from top to bottom, and you'll see the Litecoin halving.
Oh yes, no, it's literally halved in price. That's good.
Yes.
Yeah, so I mean, jokes aside, I did want to tweet about this, but then I decided to write about open interest and liquidations because I hate myself. But the market, if for some reason you wanted more evidence that the market's super sort of PvP predatory on the altcoin front, and again, I disagree very strongly with those who say that PvP doesn't exist and lol, you're just bad at trading. I almost don't know how to argue with those people. If we have such a like fundamental disagreement as to the different regimes that exist in the crypto markets. But nonetheless, without rehashing that debate, if you look at some of the most recent stuff, like Base, for example, and the price impact on optimism, Sheeb and the Shibarium launch, it's just been sell the news after sell the news after sell the news, you know?
Yep.
There's been like, Litecoin halving, of course, goes into that as well. When the market's bullish enough, and if you catch it at the right time, like an early stage bull market, the usual altcoin sell the news narratives have like either a much smaller impact and get absorbed and go up as a result, or just have no impact whatsoever and get absorbed off the bat and prices go up. And we've seen that happen with like token unlocks, with news or whatever else. Like it's a thing, it's a phenomenon that does exist. But we're on the other tail end of that essentially, where any news is an excuse to sell the news and it gets sold very aggressively and you get no reprieve whatsoever and it sort of fades into irrelevance to a large extent after that. So if anything, the edge in centralized exchange altcoin trading in the far and few and far places, or far and few, I don't know how to speak English, that they exist. The traders that I've seen make it work have basically been just dumping on these narratives, be it Litecoin, Optimism, Sheeb. That seems to be, if there's any game in town as far as on-chain, not on-chain, centralized exchange altcoins go, that has been it. And none of the usual trendy stuff or sectoral rotation or narrative-driven stuff. No, it's just like straight up dump the news on people who watch crypto YouTube videos. And that's, I think, quite telling for the market as a whole.
Yeah.
I did also want to bring up BNB because you were tweeting about it, and it's back at what I think is a scary place, really. I don't know really what other adjective to use, but we're back at the extremity of the weekly time frame at around 210, 220. The market also, in this case, consolidated for 1, 2, 3, 4, 5, 6, 7, like 9 weeks plus, depending on how you count. And we've now broken down from that consolidation on the weekly, right? And during that consolidation, depending on your level of cynicism, we've had launchpad after launchpad after launchpad, and with some commentators arguing that that's just like a cheap trick to prop up this market. I'm not fully sold on that, but I can definitely see the argument for it. And now we've broken down from there, and we're back at what I think is a reasonable sort of 6K BTC analog for BNB, where you look at a level, it's your multi-year range low support, the bounces are getting weaker, and you basically don't want to look down below because there's really nothing there. What do you think of BNB? It still feels kind of scary if the chart stays like this, especially if we sort of used up all our tricks in the last 8 to 10 weeks as far as launchpads and other things go. I really don't know how this thing fares if a technical breakdown follows through and what the implications would be as far as any fundamentals of the industry as a whole. Or maybe there's no relationship between them and this is all conspiratorial nonsense, but I'd like to get your frame on this.
I mean, I don't understand how anyone would want to hold BNB. Like, I absolutely just don't get it in the current market conditions. Now, like, there's upside to be had, right? It's the range low and there's the range high is quite a bit away. But the risks just seem so stupidly high that Binance gets into, like, either Binance gets into regulatory trouble or just in general something goes wrong and you just sit in a market that is, one, like you said, quite weak, and two, has all of this overhang regulatory wise. I just don't see the point, right? So just from that perspective, I wouldn't hold it even if it looked good, but it looks terrible. Like you said, it's the depending on how you look at it, it's the third test of this level, fourth test, whatever. And there's no support below, right? There's nothing. And the market's been getting weaker and weaker and weaker. And if you get any kind of sneeze on Bitcoin to the downside from this point onwards, right, you're kind of screwed on BNB. So you're basically at the mercy of CZ if he decides to save you or not. And you're also at the same time at the mercy of the regulator, like the regulators, because if they do something, you're probably screwed as well. And both of those things you cannot really, both of those things you cannot influence, right? There's nothing that you have no edge there. So I don't really, from a trading perspective, I don't see the point. Shorting the same thing, like where do you want to short this thing on Binance? It seems kind of stupid. So like there's just, BNB is just a chart to look at if you want to be scared, really, at this point. I think there's no
It's the
trade to be
official
had.
fear porn chart. Yeah.
Yes, because I mean, if this goes, like, where does it go and what happens to Binance? I don't know. I know that a bunch of basically employees of Binance have a bunch of BNB, and I'd be getting nervous. But yeah, I don't want to FUD it too much because at the end of the day, it's the biggest exchange in crypto. More likely than not, they're gonna be fine. But yeah, you couldn't get me to hold this thing.
Fair enough. Yeah. Even on a purely technical basis, because there's a lot of things you have to establish if you're going to be making like arguments that BNB going down will be really bad for Binance. There's sort of causal relationships you have to prove, and simply saying "lol," happened to FTX and FTT, therefore it happens to BNB, it'll happen to Binance, type of thing, I think are underdeveloped arguments. Yeah, you have to sort of pass some steps before that, but purely from a technical point of view, like a multi-year breakdown with a big volume gap below, regardless of the chart and any other surrounding infrastructure, is just not very good. So let's do the launchpad dance and hope for more of those, I guess. Because and I think you hit a good point that there's just a lot of opaqueness with regard to BNB in general, as far as just like holders, and it is the exchange token of the biggest exchange. So would you really want to take large positions on that exchange? That seems like a really dumb idea. It's just pretty opaque, and yeah. For observation purposes only, perhaps is one way to look at it.
Yeah, and the thing is, it also makes sense to be weak in general if you think about the volumes that we've been having,
Sure.
right? Like, there's just not been that much interest in crypto. Bitcoin doubled, and volume still kind of trading like there's barely any trading. And Binance is running a bunch of these altcoin markets that all are not doing anything in comparison to what they did in the past. So it kind of also just makes sense from that perspective, even if you're like, okay, all that regulatory stuff is just FUD, even from just a pure value kind of perspective, there's really not that much trading happening. And if you have an exchange coin and exchanges are doing less and less good, it makes sense that prices would go down, right? And then,
but Don, it's not an exchange coin. It's a BSC native token. Wink, wink, nudge, nudge.
Yes. Let's see if anyone falls for that one, because
right.
I certainly don't.
Yeah. Well, 4. Ignore FUD, keep building, all that good stuff. I think last week we tried to articulate of what if gun to our head, what a BNB trade idea would look like, which would essentially be like a poor reaction or a misunderstanding of any headline that causes a dump, but actually isn't that bad. That's really still the only thing that sort of makes sense. But then you still run into all those execution issues, like where do you do it? Is that the best trade if we do get DOJ headlines compared to other stuff? It's just not high on the trading hierarchy, but very high on the, oh shit, let's look at this thing hierarchy.
Yeah.
Let's talk about, are there any other alt things you want to discuss, or should we discuss the S&P? Because that's relevant again.
Yes. I mean, I said it on Weekly Open, you remember? Like, I was like, it's going to be a macro thing again, where we kind of get sucked back into the macro world.
God, yeah. I didn't miss it, I'll tell you that much.
Yeah, a week later now we're back into macro land.
Do we get a light congratulatory, English is hard still, pat on the back for the correlation argument, and the macro is going to be more relevant, in the second half of the year type of point? Because we sort of banged that drum reasonably hard, and I don't think it's unrelated, the price action between these two.
Oh yeah, it isn't. I mean, it's pretty clear that the Bitcoin markets turned to shit basically the moment the S&P started trading into higher levels and then started retracing.
But
And
we were going to
kinda,
catch up, Don. Remember, we were going to catch
Oh,
up to the S&P. That was a serious argument made by serious people.
yes, but it doesn't look like it. Don't think that's gonna happen. Like we have been playing just like weaker S&P for a while now, and just betting on that to change before it actually changes just doesn't make much sense, right? People are always like, "Oh, follow the trend," but then the moment they're talking about their favorite asset, they're like, "Fuck it, it's cheap now," or "Fuck it, like relative speaking, like I can buy this and this much more Bitcoin than I could have otherwise." I'm like, well, that's exactly the opposite of what you've been.
The trend is my friend unless it's going in the direction I don't like, in which case it's my enemy type of thing. You know that famous trading slogan?
Yep, and that's exactly what seems to be happening. And the scary part is, right, the S&P, like if it actually goes poorly, it has quite a bit of room to go.
Yeah, so let's talk levels on this. I think one that we outlined as the early support was some version of 4,300, you know, the bottom of that monthly cluster before the all-time high.
Yep.
That was some sort of area between 4,300 and 4,370, I think, is how we discussed it. So that's probably the first trouble area if you want to use that type of terminology. But if that's not enough and we get like a material pullback, 4K, right? 4,100, whatever. And if we're looking at sort of the impact on BTC, even just by the S&P retesting support, which is in a purely technical sense what it's doing right now, that doesn't look great. And if that fails, then you can imagine all the Wall Street cheat sheets are going to come out. That this was like the mega lower high before it all goes to zero. And then we're talking, you know, quite a quick rotation from 46 to 41 on the S&P, and I don't think that leaves BTC any better off. So,
nope.
Are those the two areas that you have outlined? Basically 4K, 4.1, and then the shallow pullback to 4.4310, 4370-ish, or do you have something else?
Yeah, pretty much exactly. Yeah, you kind of want to see the current levels hold where it's trading right now. If those give out, there's pretty much nothing, and then we're back in the range, right? I think at that point, like if we lose 4.3K, we're back in the range, and the range goes from 4.3K all the way down to 3.7, and we just had a false breakout, right? And then you would expect, at least I'm not necessarily expecting the range low to get taken out like it would in crypto, right? Because crypto always overshoots, undershoots. But I think that range would be in play again if we lose 4.3K. And that's quite a bit of a movement, right?
That's a lot, yeah.
That's for the S&P, that's 15% to the downside. And how, like, we see what the current move of 5% did to Bitcoin, right? 5% on the S&P is like 20% on Bitcoin right now, almost. And then you go 15%, and that's not
Listen,
nice.
it's not going to be linear, okay? Fuck off.
It's probably not going to be, but still, that's something to be worried about should support break. We still have 2 weeks to go.
Yeah.
So it doesn't really make much sense to be too alarmed about it. I think it makes more sense, especially given we have catalysts in crypto itself, to kind of look at those right now and then see how the S&P is going in a month's time.
Sure. Yeah, agreed. The levels, granted, are actually very good on the S&P, so that helps. I remember there was a period where you were taking your crypto signals based off the S&P, like way
Mm-hmm.
and you were nailing all the S&P trades, and that's when that relationship started of BTC not following along, and that was very painful.
So much, yeah.
But we did pretty well, you know, from a content point of view, whatever the fuck that's worth, around the 3710, 3760 range low, which was pretty scary at the time. But the monthly time frame just cooks when it really matters. So it's reassuring to see that be consistent across several markets. One thing I just randomly remembered before we move on to the news section, as far as the ETH BTC, I don't want to call it strength per se, but, you know, like reaction, I suppose. We did get news that it's likely that there will be approval for ETH futures from the SEC. And so maybe that is somewhat responsible for...
Yeah, but we already have those anyway, so... Like, there's a bunch of ETH.
Do we have proper ETH futures? Yeah, God, maybe. I'm honestly not familiar with that specific portion of market structure.
As far as I'm aware, but I'm very much not the guy to ask.
Right.
Like,
I'm sure someone in the audience can tell us. But maybe even just seeing ETH ETF was enough for someone to lift some offers.
I think literally that. Like, a bunch of people are just like ETH ETF. And then they didn't really realize that's the future ETF. And I mean, there's a shitload of Bitcoin future ETFs.
Oh yeah,
already.
yeah, and they all suck because they can barely, there's rollover fees and they're terrible at tracking the underlying asset. So it's not like a solution, dude. Wouldn't it be so cheap, as far as the SEC going, to give the ETH futures a pass or whatever, just like let those headlines persist, and then slap the Bitcoin one down. It's like, oh, well, you got something. You get your ETH futures that you already had. But the Bitcoin spot ETF, don't be ridiculous,
That'd actually be quite funny.
That would be, that's
bullying.
Way. Exactly. So, yeah, that's really the state of crypto. Leave us a like if you enjoyed the attempt at a summary. But that's pretty much where we are with BTC, ETH, and altcoins as well. And as always, legacy being unhelpful, which we're getting used to at this point. Should we do some news stuff?
Yeah, that's it.
As you can imagine, most of the news stuff has been price-oriented. Crypto prices rally back. I know, it sounds odd. As SEC said to be ready to greenlight Ether future ETFs. So this is from the block. And yeah, now surging on news that the US SEC is said to be ready to greenlight ETH futures ETFs. I think this is to do with, how we had a ton of recent filings, Don, for ETH futures from a ton of these firms doing like a light copycat of BlackRock, but not really. Maybe it's in reference to those. But yeah, that happened. I'm not sure where the rally is. The rally in the room with us right now, not entirely clear. But as far as price catalyst, whatever stuff goes, I really think it could be as simple as people seeing the words ETH future, ETH and ETF lifting the offer, and then maybe reading futures and cutting that position somewhat. As we said before, it's really the spot ETF that is more important, both from a market structure point of view and in terms of market impact and the catalysts that have been important in this market. Crypto sort of futures ETFs are old news, I suppose. And wouldn't be anything particularly new or revolutionary, although they did mark the top in the past, so fuck me, I guess.
True, actually,
yeah. They have a particularly good history there. Judge in Ripple case grants SEC request to file interlocutory appeal. So we sort of chatted back and forth about this, how the Ripple decision seemed maybe stretched, or at the very least would have a high probability of being appealed. That appeal has been granted. And of course, that has the effect of just leaving US crypto businesses in limbo, right? Because if you wanted to rely, as usual, nothing new there. So if you wanted to rely on the favorable and generous SEC XRP decision, you can't do so with the same degree of confidence now, because it's been granted appeal and it'll be discussed as a matter of law. So, if you start setting up your business on the assumption that there's suddenly going to be a new favorable framework, and then the decision gets overruled on appeal, then you're fucked. So more limbo for our American friends. It's also funny that a lot of, we're not just speculating that on the state of this limbo and that people are acting on this information, because what we saw immediately after the decision was a lot of these exchanges just started relisting XRP and a bunch of other assets, right?
Yeah, are they going to delist it now?
Well, exactly, right? Can you imagine the decision gets overturned on appeal and they have to delist it again or whatever that? I mean, this is quite a long process generally, but yeah, I don't think it gave as much clarity as people hoped it would. It's like, oh, yes, we won. It's like, yeah, you won at this court with these facts on this decision. But it's not like, this isn't an act of Congress. It's not legislation, right? And that's really what we need, but also sounds like what we're not going to get. Grayscale is hiring for ETF team as Bitcoin decision looms. Did you see this? They were tweeting with the eye emoji.
Very fucking odd.
Very juvenile type of... I don't even know, man, because they didn't know the outcome of the case.
No, it's so dumb.
Yeah, so basically, sort of Grayscale, which is currently in litigation with the SEC over their product and, trying to convert GB or, get approval for a spot ETF themselves, they made a tweet saying that they're hiring for their ETF team. The market, some market participants interpreted that as a sort of tacit endorsement that they were going to win the case, or some sort of hint, which would be insane because they themselves don't know the decision until the decision is published, right? If you wanted to be slightly less cynical about it, maybe they have a clearer understanding that some of the ETH futures applications will be sort of allowed, and that the ETF team was advertising for those. But that's still kind of shady because we know that the market is extremely focused on the Bitcoin spot-oriented ones, and no one really cares about the ETH futures ones. And it just seems like an odd time for the company to be pulling those social media shenanigans. Not to mention they're also in litigation with Gemini over Gemini Earn. You know, not everything is going hunky-dory over there at Grayscale. So I wish there was a bit more decorum and, I don't know, class when it came to the social media side, but we know not to expect that. So.
Yeah, that's how it kind of goes in crypto, right?
Yes.
But in general, like just tweeting that out is so dumb. Like I don't understand how you could do that as a business. Just wait for the decision and then tweet it. Or like that everyone's like laser focused on it,
exactly,
right? And everyone is gonna look at it, and then that having a price impact is just gonna make you look so dumb. Like they're quite lucky that it didn't have any really meaningful effect.
Yeah, everyone was too dead.
Yes, but like it's just such a dumb thing to do. I'd be shocked if it wasn't crypto, right?
Right.
But it is crypto, and we're used to it.
I mean, devs and companies and founders tweeting about prices and stuff like that, and just doing, commenting on stuff that's particularly market sensitive, especially if they don't need to, is pretty dumb overall. But it's also what we do best. It's literally everyone's obsessed with it. They can't help themselves. And it makes for nice trades from time to time as well. Certainly on altcoins. When you get the devs and founders talking about like talking to traders on Twitter and like posting eye emojis and like, oh, we crossed this price. I mean, that's a pretty good fucking risk off signal more often.
Oh, I tell you, like, I think it's one of the best one. Like, if you think TA is bullshit, and fair enough, right? Like, just literally, if you have a coin that went up a lot and the dev is tweeting about the price, just fucking sell it and come back a year later and thank me. Because it's literally, I've never seen it fail.
Well, like a fucking day later in a lot of these cases. It's really uncanny how well they can time the tops on these things.
Yeah.
Well, it's not really them timing the tops, right? I think a lot of the time they'll tweet about price, which is correlated with the average market participant being euphoric. And then the less experienced traders might pile in and see that as an endorsement. And if you're a smart trader who's in early, you're not going to want to be in the same trade as those people. So you dump, and your bigger stack has a larger market impact, and that spooks some of the smaller guys, and you sort of create the top, if that makes sense.
Yes, it's quite funny. Like it's a bearish thing more so than a bullish thing, but the devs just can't help themselves. Seen it too many times.
Yeah, it's chronic. Even at this point, there's so much evidence that it's like a bad idea, but you can't keep the gambler constrained, I suppose. Shibarium sloppy launch sees $1.8 million stuck in pending state. I don't really know why I brought this up. It's just. Yeah, I think this is to segue on the whole thing of altcoins being sell the news, but we discussed it. Yes. It'll be interesting. I think one of the, you know how we have basically risk proxies for the market? Like, oh, bad news is not having an impact. That could be bullish. Good news is not having an impact. That could be bearish. Like those types of things, which aren't direct sort of technical indicators, but you use them to build a picture as to how the market's positioned or if anything's shifting. I think one good one is seeing how in the future and down the line, the market reacts to these sort of known news events, unlock events, whatever it may be. Because at the moment, it's just been pure sell the news for everything, like immediately. I think it'd be a good signal for risk on if we start to see some stickiness to these trends and impulses. If even when the news comes out or even if the event happens, the market doesn't just dump off and disappear immediately, but maybe absorbs it and keeps going. I think when we see that shift from like cynical sell the news immediately and never look back to something a bit more with a bit more life, that'd be pretty useful as a proxy for risk, I think. But we're just not seeing it at the moment. So that's something to hope for the future.
Yeah, it's quite funny when you think about the whole like Shiba Inu, right? Like you put a bunch of money in it and then they botched the launch. You're like, fuck them. Like, how could they do this? And you're like, you invested in a fucking dog project. It's like,
is no one serious about this? Like.
Yes. It's just crypto.
It is very crypto. Also, Don, I'm just like going through your tweets. I'm super concerned that you're referring to yourself in the third person. Can we like not do that, or are you off the deep end and fully lost?
I'm fully lost.
Okay.
Price action's been so bad. I'm
Duck personally is waiting. Oh, come on, man! You can do better than this.
No. This
you can't.
Exactly this is one I cannot, and two, this is exactly where we need to go.
Okay.
It has to get very degenerate for this to bottom, and I'm doing my part.
Okay, so new market signal dropped when Don's grammar returns to a sort of passable level and he refers to himself in the first person, then maybe tag on some risk. It's just going to be the profile picture, except a slightly more modern version.
Yes.
I did want to ask about a tweet that you made because I thought the timing of it was very good. And it was this one. I should really like all your tweets, but I don't do that.
Fuck you.
Actually, I don't like any of them really. I'm just scrolling right now. There's like one or two.
Wow.
It's rough out here. I mean, we are just
Yeah.
contractual colleagues for an hour and a half every Friday, so you can't expect
True.
me in my free time, my unpaid time.
On Twitter, yeah.
On Twitter, no less.
Time.
Yeah, exactly. So this is good. And this was on the 15th of August, obviously before the dump. The argument you made was, I see strong buybacks mislabeled a lot. Strong buybacks exist, but they're different from someone just market buying into an empty book after a flush. It takes a while for asks to walk down. Just because you get a big candle up after down doesn't mean there was much buying. And this is also quite relevant to the price action at the time, because a lot of market participants were like buying sweeps of different sorts. Like, oh, yes, look, it's a spike, or we're at the range low, whatever, and looking at the sort of micro time frame wick reaction and inferring strength from that. So I thought maybe from a nice little educational point of view, could you explain this tweet? So the difference between a strong buyback, like why isn't something that just has like a big wick to the downside and then goes up a strong buyback? And if it's not, how do you distinguish between a strong buyback and this sort of empty book shenanigans?
I mean,
or you could just say, that's my alpha, fuck you, I'm not telling you.
No. I mean, there's a lot to it. And I'm like not an expert in this kind of trading because I generally don't trade the low time frames these days anymore. But it's something that I used to look at a lot, right? So, for example, if you turn on the 4-hour Bitcoin chart, right? Before the breakdown, if you mark out all the wicks and all the SFPs in quote that we had, you've had like a positive reaction to almost every single one of these for a very short amount of time, right? And people are just looking at those and they're like, oh, this is a strong buyback. And this is kind of what I was referring to, right? We saw these SFPs all over the place. I know that's not technically like the correct usage, but that's kind of how it's used. So I'll say the same. But what people kind of forget is that if you have very low volumes and very low market participation in general, then you get these situations where someone dumps, a bunch of people get stopped out, but there's not really that many new people or like people already in position that are moving their orders around, right? Because no one's looking at the market really. They're just sitting there enjoying the sun in the summer. And then some random guy buys the liquidation in a market buy order, and the price just completely catapults back into where it was before, right? Because there's no new asks, for example, the same on the other side. But there's no new asks that kind of prevent price from going up. So you can just buy like a bunch of Bitcoin, for example. In altcoins, it's even easier. Like you see this oftentimes in altcoins where you have a 10% dump and you have pretty much an immediate 5% reaction to the upside. And that's basically just because the book's completely empty. If you've ever traded like a shitcoin with very low volumes and very low liquidity as a whole, you will have seen this before. If you just like it dumps and you're like, oh, I want to buy this dump, and then you market buy by accident, and it actually ends up higher than it was before the dump. And it's basically just because there's no one had time basically to move anything around. And then if you watch these, like the 4-hour, for example, what happened is that people, like after the dump, you had the move back up, and then it stops exactly where it was before the dump. People get bullish because they're like, oh, it's a return. We kind of made back the losses. It's a strong buyback. But what happened is just basically a bunch of people got fucked, and then you get back to any meaningful asks, and the price just stops because there's no volumes. And then it keeps going lower. And this is a bearish thing, not a bullish thing. And if you see like SFPs over and over and over again, that's a very, very bearish signal. It's one of the most accurate ones. Like if you get this on the 4-hour, where you get just like spikes lower, and you keep walking down. This is one of the things that before the 6K breakdown back in 2018 alerted me that we were gonna like eat massive shit It's basically because a bunch of traders trying to get long, and that's where this is coming from. This kind of price action. It's people fishing for long, and it's a bunch of people fishing for long. And when that happens, when the market is bearish, you have big problems. And the way to kind of differentiate between the two is, one, you can just wait until price is actually like meaningful above where it's like where the breakdown occurred, but that's kind of shitty, because sometimes it does push higher because a bunch of idiots are basically, they're like, oh shit, this was an SFP, and then they jump on. So you might just be like literally buying the top. But more importantly, what you can do is just you look at how interesting the market is right now, right? Like strong buybacks only occur when you actually have a strong market as a whole. And the same thing is true on the other side of the market. As in, like, if people are actually trading it and this happens, like if there's volumes, if there's interest, the only way for it to come back all the way up is because there's actually interest. And then it's a strong buyback. But if the market is completely dead, it's not a strong buyback. It's more likely than not just no one looking at it.
Low liquidity, stale orders, that type of stuff. Yeah. I think that makes a lot of sense. You can also, if you look at that type of stuff from like an order flow perspective, look at delta and like a footprint or something of that nature, which can tell you if there's like a real attempt to break this thing down, which has participants trapped, or if it's just one of those drift down, drift back up type of thing. Because if you're going to be employing SFP failed breakdown logic, you want someone to be trapped. So you want like a above average or like a, you know, sort of exceptional level of either delta or volume trapped below that low. So you have someone to squeeze in the first place. Whereas if it's just sort of ping pong between sort of stale orders and low liquidity market conditions, you're not going to get that trap trader setup where participants have to act urgently, because there's no reason to act urgently because no one's trapped in the first place. It's just the market poking and prodding. You want to see aggression that goes unrewarded as opposed to, drift below and then making a big deal out of that, I think, if you care about that type of stuff. So,
But in general, like people are just basically taking techniques that they don't fully understand. And I mean, the reason why I'm like a little bit hesitant to kind of explain all of this is because there's people that do this way better than me. This is like something that I was trading based on like years ago, right? The longer you basically haven't touched something, the more sophisticated that kind of thing becomes in crypto, at least.
So that's why women are so sophisticated. Got it.
Yeah, it's because it's basically the market evolves, right? And people get better at their niche, and this is one of them. So if you're just like stuck, like just looking at it at face value, like, hey, this just dumped and took out some stops, so now it has to go up, like that made you money during bullish times, but obviously it's not gonna stick around. Like that's not alpha that is gonna make you rich in the long run. Like that's just not how it works.
Same with candle closes, right? There's a lot more nuance nowadays than just the classic close below, close above, close at the level. You have to sometimes get more granular with it, and you get some ambiguous closes that you need to know how to treat, and incorporating more than one time frame, all the basic TA stuff. It still works, but you have to iterate on it. You can't stay static, I think.
Yes. And I mean, what you can do is you can stay static until it stops working, but then you have to move on quite fast.
Yes.
I've seen a lot of people be basically locked into this mentality of, oh, this worked in the bull market, it's still gonna work, and then they give all back, like everything back that they made during the bull market. Or the same in the bear market, really, right? Like you have bear market patterns that keep on working, and then people just cannot let go because they're like, hey, this made me all my money. I'm just gonna continue to trade like this. But you have to kind of understand that markets trade differently in different conditions. It just makes a lot of sense when you lay it out like that, but a lot of people just have this one framework in mind, and then they cannot move away from it. But you have to realize, like, in general, fundamentally, bear markets, bull markets, and choppy markets trade completely different. And more likely than not, what works for you in one market will not work for you in the other. And then you can obviously make the argument, hey, how do I figure out which is which? And that's the difficult part, right? Like that's where you have to have like an overarching kind of idea for the market, because a bunch of people are like, oh, the market went down 40%, so it has to be a bear market. Not how it works, right? Or like you're like, oh, this the daily is trending down, so it's bear market. Also not how it works. Like this is actually way harder to understand in what kind of market you're trading in than people make it out to be.
It's probably the hardest part. Like, what is the
Yes.
regime? Which is paradoxical because we talk about regimes so liberally, but actually identifying which regime you're in, when it switches, and those two in particular, it's like the hardest part, to be honest.
Yes.
It's like, what is the trend? Just that question seems really easy to answer. It's like, oh, well, we're above this moving average or whatever. But it's like the trend on what time frame, you know?
Yes.
And where are we within that trend and that type of stuff? So like you wouldn't trade the start of the trend as you would the midpoint, as you would the what you perceive to be the end of it either. So it gets pretty nuanced pretty quickly. One bit of information that has helped me in the past is if you have setups that perform particularly well, particularly poorly in specific regimes, and they're working quite well or not working, and then they either stop working or start working, that tends to be a good leading/early indicator. Like, if you have a ton of range-bound mean reversion systems or strategies that have been printing, and then suddenly they just start eating shit beyond what the normal variance is for those strategies, that should kind of nudge your interest towards, okay, maybe the conditions are shifting. And it works the same for trending stuff. If you've got like a basic trend following program that prints when the market's trending, and then suddenly you just start eating shit on it beyond the abnormal amount of variance you experience in that system, that you should at least consider that stuff is changing. So if you have good setups and good categories, it can make that job easier. But I feel like we're just too fucking lazy at this point and just have like a couple of discretionary things that we punt, and it's nowhere near as systematic. But don't be like us, be better. That's not hard to do. And that's a decent way of going about it. Even if it's one or two setups like that, they can give you a lot of useful information based on how they're working, not working, or working more/less.
I think in general, like, and this is how my journey has been, like, you go basically from like not knowing anything and just like punting to making like at least the people that are like successful that I've seen, you go from like just doing whatever to realizing that's not how you can do it. So you do it like more systematically, and then you start getting more and more systematic, and you start understanding the market and how it works, the specific market that you're trading, right? Because I see a lot of people try to kind of employ the same logic for different markets as well. It's not the same. Every market trades differently. And then like you just start moving away from that systematic approach more and more as like your experience grows and you kind of understand things, and you're like, this system kind of just boxes me in too tightly, and then you just evolve on based on that. But if you never make the system in the first place, then you're just going to be utterly lost. So I think like in general, and this is why it's so hard for me to kind of like, when I'm trying to teach something, like I struggle often, because like a lot of this stuff is just, it went from being a rule to being like something that I watch to like just like a background feeling, right? Like it all changes and gets a little bit less systematic for me with every passing year. And then it's quite hard to think back, okay, like depending on where you are in your journey, like you have to kind of explain stuff differently. And then with a broad audience, just kind of gets difficult. And that's what I'm struggling with anyway. That might just be me being lazy.
I mean, I think this is why I exist on the show. It's not because I've got anything uniquely useful to offer. It's because I can roughly translate whatever the fuck you do into remotely intelligible terms. So no worries. As long as you give me the bare minimum, I'll make, I'll make something happen.
The Dawn Whisperer.
Yeah, I'm the fucking Duck Whisperer, the Dawn Whisperer, whatever. That's my entire purpose on this show. And hey, it seems to be working. I think we got through a decent chunk on this episode. Any final notes, questions, concern, FOMO, complaints?
No, the market's just shit right now. And I'm not even talking about like just Bitcoin, like in general. And this is macro me talking again, so I'll keep it short. But like just thinking about how the world is like going right now, I've had like a few discussions with friends that work normal jobs that are canceling holidays and whatever, because they're just like, everything's been getting more expensive, so we cannot do as many holidays as we used to. People kind of like holding back from going out to eat, all that kind of stuff. And that's coming from a first world country, right? So it's kind of like all of that has me like suspect that markets are just gonna be trading poorly, because if people are, especially like if you're talking about Germans canceling holidays, it's not how it
unprecedented. Yeah,
this is just, it's not how the Germans have to go to the pool and put that.
They booked the sunbeds 6 months ago.
What are they gonna do? Like the sunbeds are gonna stay empty. It's
unreal.
impossible.
I didn't realize there was a humanitarian crisis in Germany, but
exactly.
that's what it sounds like.
But no, I think like the macro situation is one of a lot of worry and of slowdown for now anyway, in my eyes. So for me, I'm just focusing on kind of making only the good decisions, not the ones like, because usually you get, when the market is just up only, you get rewarded for making decisions, not even good ones. You just need to make decisions. And I think the market is now at the point where you need to make really, really good decisions and fewer of them. And that's kind of like how I look at it. I don't really see good reason to put on risk. And I think that's going to be here for a while. Could be completely wrong, but I think like the next few years could actually be quite poor trading wise. So I'm prepared for it. Don't know if that's going to come true or not, but that's kind of my base case right now. So it's a little bit depressing.
You suck. Listen, I wanted to wrap up the show with this awesome educational piece on strong buybacks versus stale orders, and instead you talk about how your German friends can't go on holiday and how the next 3 years are going to suck. This is terrible.
Well, that's what you get with me, yeah?
I suppose so. Well, you heard the man. Go listen to your macro podcast and hug your loved ones, because they're not going to be around for much longer, apparently. I don't know how deep this macro rabbit hole goes, but I'm not sticking around to find out. That's all from us this week. Leave a like on this video if you enjoyed it. Leave us a comment if the show has been somewhat helpful, as we've had our first impulsive move in months. As always, the show is brought to you by Woo. Links available in the description below. Please read our long-form article and feel free to ping us with any questions or updates or concerns or whatever else. Thank you for your support. Hope you're trading safely, and especially if you're in Germany, our thoughts go out to you. That's all from us, and we'll see you next week.